Welcome back to the channel. We're going to make the case here for why the bull market continues, right? Using not just the technicals, looking at the technicals, but looking at the macro economy, the macroeconomics, right? What's going on with consumers? What's going on with the Fed? Inflation. We got their inflation report today. Inflation is still falling, right? And the fundamentals. We got some good fundamentals, so stay tuned. Let's get into it. All right, so first let's take a look at the technicals. If you are live, let me know how the sound is, if it's too loud, if I need to, turn it down. There's always some issues with the sound. So let me do that. But first, let's take a look at what we got for the Qs. This is the all-time highs back in 2021, right? So we're headed for all-time highs. We've been talking about this Santa Claus rally the whole year. Well, not the whole year. We've been talking about it for the last 3 months, Santa Claus rally. Now we have the Qs actually breaking out. So let's draw some resistance here. Let's actually see where that top resistance is. Okay. Looks like this is the weekly chart. So we're going to start with the weekly chart, turn that into resistance, right? We kind of know that's where we're headed. Now, recently we have broken from this previous high that was back in the summertime, the end of the summer. And I think we came back and actually supported that level, right? So let's draw that here. That we'll draw the top of that wick. Boom. And we have a clear breakout over that level. We got a clear breakout over that level. And we did find support somewhere in this level. Okay. So we are moving higher. Let me know how the sound is, guys, if you're in there. So that's the Qs. The Qs are still moving up. If we want to take a look at RSI. Now, for me, I still think we have room to move higher. It is bearish divergence. Okay. It is a little bit of bearish divergence, but we are melting up based on macroeconomics. And we're going to go over the macro because that's been the highlight of the market is the macro, not so much just the technicals, not just the fundamentals, but now the fundamentals are starting to come into play here, right? So we will go over that. Before we hit the macro, I just want to keep it clear here. Let's take a look over at the fundamentals first before we do the macro. So you can keep in mind that we have bullish fundamentals first and foremost coming into this market, right? And here is what I mean. Profit margins are estimated to rise going into 2024. So this is 2023. We're pretty much done with 2023. And although growth has been slowing, and it's been a slow year, we still came out with 11.7% profit margins for the S&P 500. And now estimates are at 12.3%. This is the highest level since 2021. In 2021, remember, this was massive stimulus for the consumer, right? Massive stimulus from fiscal direct checks. This was, the Fed cutting rates to zero. This was the Fed's balance sheet coming into play, injecting money into the system. So we're now rising from that, and we're actually higher than we were if you go all the way back to 2013. I don't know how high it is in comparison, or how high the profit margins are comparison to the past, but it looks like we're pretty much rising to all-time highs for the S&P. A lot of this, I believe, is due to AI, due to immigration coming into the system, due to artificial intelligence, and really due to fundamentally corporations are cutting their cost structures, right? They're cutting CapEx. They're not spending as much on all these crazy projects. They're cutting those expenses. That goes directly to margins, right? That goes directly to profit because they're no longer spending there. Also, producer prices are negative at the moment. We're going to get PPI coming in tomorrow. So it costs less to produce, and they're using productivity tools to actually increase that. Now, if you look at the full earnings picture, so that was profit margins, right? That's after all the revenue stripped out. Now, if you just look at pure EPS estimates, so earnings per share, this is what the big institutions want to see, which is the earnings recession over. This was the earnings recession we had before, but during the pandemic, right? We had a big earnings recession. Obviously, that was a shutdown of the whole economy. And then we had that big boom. We had a gigantic boom. And then we came back into recession. This was what everybody's worried about, but we're now leaving that recession, right? So the EPS growth for the S&P 500, if you just take the macro, the whole entire market, earnings per share are rising due to the fact that profit margins are coming up. And this is while revenues are not that strong. Revenues are not, insane, but profit margins are up. Therefore, those margins, those profit margins are going into the earnings per share picture. And now earnings estimates total for S&P are back on trend, back above trend. So from here on out, the takeaway is that earnings are rising. Top and bottom line earnings are starting to rise. That's what institutions want to see. That's why we saw the biggest inflows in history for the Qs, right? The biggest inflows in history for the Qs about 2 weeks ago. And corporate buybacks also, which is helping pump EPS. Okay. So that is the earnings picture. Now let's take a look at the macroeconomic picture. This is, I think, the reason why we stay bullish. We will go over inflation. We're going to go over that last, but I want you to take a look here at the forward-looking growth metrics, which are manufacturing services. And this is ISM, right? This is ISM manufacturing. If you're not used to it, it's basically forward-looking growth. GDP looks backwards. So we don't really see the future. You don't drive a car looking into the rearview mirror. You want to look forward into the front mirror, and that's what this does. So you see services in, teal blue have pretty much stayed on trend, right? They've never went negative. And negative would be, or, sentiment would be below 50. That would be contracting growth. We're not getting that. We're getting, we're getting expansionary growth on the services side. That has never weakened the whole time. We haven't had weakening in the services sector. That's about 70% of the economy. Now, the manufacturing has been, negative, but now it's starting to bounce. You get a couple bounces here, bottom, right? Bottom of services was back here in at the end of 2022. So January, we had that big rally. Now manufacturing is starting to recover. We're expanding. This is also where growth continued to rise, even though the consumer is slowing a little bit in Q1, Q2. We should see the consumer slow, but output is productivity is the name of the game here. This year that we're going into is you know, S&P 500 companies or the stock market in general is creating more production, creating more productivity per unit of labor, which means people are in general producing more services and goods per hour worked. So you get the growth without the inflation. And this is going to be, let's see, non-business sector. So we're looking here basically at the manufacturing sector, the services sector, and productivity is on the rise. Okay. We had the jobs report last week. I think we had talked about it a couple days ago. And basically, unemployment still remains at historic lows. Okay. Everybody thought it was going to spike, but we never saw the initial jobless claims actually get to the level where unemployment would spike. Initial jobless claims lead unemployment, and initial jobless claims are still trending sideways. They're not spiking. So unemployment remains soft. There's more people coming into the labor force still. Although you see jobs start to decline, right? They've been declining for a while, but they're still positive. This is just a cooling of the economy. It's not recessionary. Okay, so we are getting that. Now that is due to the gig economy. This is what's not being measured in the jobs report. Just so you know, payrolls, right? These are payrolls that are being reported to the government each month. But the gig economy, right? What is the gig economy? This is the economy that measures freelance work, temporary work, right? Basically, the hustle economy, or what do you say, short-term jobs. These contracts are not coming into the jobs report, and it's getting bigger, right? There's a lot of people that are doing Uber. Excuse me. There's a lot of people doing Uber. There's a lot of people doing these side gig jobs, even social media marketing, whatever it is, consulting, whatever that is. There's a lot of people that built apps now where you can consult, you can pay people to consult them for whatever it is, and or handyman, just these side jobs. There's a lot of side jobs in the economy, right? Fitness, personal trainers. So whatever it is, a lot of these payrolls are just not showing up in the jobs, or they're not payrolls, they're not showing up in the jobs report. So the economy, the labor market is stronger than it looks. It is much stronger than it actually looks. And yeah, we'll go there. So the gig economy, right? 1 in 5 individuals are in the gig economy. So that's a big portion. That's what, 20%. So there's a big disconnect between the actual reports and what's actually happening at the moment. 33% of businesses use gig work. So big marketing firms, they're not putting. So if you're pushing ads on Facebook, right, on YouTube, on Google, or whatever it is, on Instagram, if you're pushing ads on there, you're going to pay somebody to do that, and they're not on your payroll. It's a lump sum. It's, hey, here's a check, or if you do this work for this long. So that's not on the payroll. That's not getting reported. It does get reported in tax season, but it's not getting reported on the month over month numbers, which is why the labor force is so strong. So basically, a lot of freelance work coming in, and this should grow. This economy should grow. Next, hey, money growth is very low, but the next move is higher because in 2024, Janet Yellen, Joe Biden, they're going to print money. They're going to figure out a way. All that debt that's been coming into the system through the U.S. Treasury, they're going to spend it right back in for social programs, for any type of weakness to restart the economy. Also, the infrastructure, the CHIPS Act, right? All the government stimulus that is still on its way. It's little by little, it just keeps dripping into the economy. Earnings estimates are up. We already talked about that, right? And the ISM cycle, that is the manufacturing we looked at, is starting to bottom here. Once it rises above 50 and starts going into an expansionary mode, I believe this is going to trigger a lot of big investors here, right? I think that's the game plan going forward. Um, okay. And so, yeah, that's part of the macro. We're going to look at the macro forces too. What up, Tigger Media? Is there US ISM ticker on TradingView? Oh, yeah, exactly. There is an ISM ticker on TradingView. Good question. I'll show it to you right now. So track that ISM. Track that ISM for sure. The ISM is the forward-looking growth. You want to keep track of that here. I'll throw it up here. Here it is. So let's take the RSI off. Relative strength. You got the Qs breaking out. Let's look at the SPY. SPY also breaking out of that level. We'll go over that. But your ticker here, Tigger Media, USMNO. Okay, there it is right there. USMNO. Oh, no, this is new orders. I'm sorry. I'm looking at new orders. ISM is I forgot what the ISM is. I have it on here, but this is the ISM new orders. So Tigger, I'll tell you this. A Goldman Sachs, JP Morgan traders, or institutional traders, I think it was, who what was the guy's name? He who's on the compound. A lot of people believe that the most forward-looking, economic indicator is the ISM, manufacturing and services. You can look at both, but within the ISM, it is the new orders, because supply chain managers are looking forward to say, what are the new orders that we should be preparing for? So when those new orders rise, which they have, it's like the micro data. A lot of people don't look at it, right? As those new orders start to rise, they've been bottoming out for a while, then you get growth. And look at that correlation with the S&P, right? They bottom back here. The S&P already bottomed. You got the banking crisis, and we came out of that because the Fed stimulated. And now that new orders are climbing, are they above 50? Not yet. This is your 50 level for the ISM new orders. This is your 50 level. Once they get above 50, you know that supply chain managers around the US are now saying, hey, we're expanding now. Growth is starting to expand in the manufacturing sector. That is the second leg to the growth story. Services are already growing. So the second leg is going to be the ISM, right? Any questions, just go ahead and throw them on there. So that's that picture there. Now looking at the macro forces, let's take a look at the macro forces. And Tigger Media also, let me jump over to give you the actual ISM. It's on TradingView. I think you've asked for it before. I think I have it up here. Okay, there it is. USB COI. That's the actual ISM. So they kind of run, they run hand to hand here, right? They do run hand to hand here. Watch, I'll turn this into a line. So this is the ISM manufacturing index, which includes new orders, deliveries, production, employment, right? And then this is the new order segment, which I think is the most important segment to growth or the business cycle in general. If you want to, if you're trying to understand how the business cycle works, or the peak of the business cycle or the bottom of the business cycle, look at new orders. New orders, they're moving higher. So I expect this to continue, especially with a record high multifamily building in the US. Yes, housing, yeah, the housing market is frozen, but that the demand is going towards multifamily, right? There's a lot of building there. And you have the manufacturing economy being supported by the infrastructure bill, right? The CHIPS Act, onshoring manufacturing, onshoring these semiconductor chips, onshoring a lot of the stuff that it takes to build tech. So new orders is your leading indicator. All right, let's get back to the market, the macro forces here, right? Now, there's a lot of data out there. There is a lot of data out there. Let's take a look at this. Let's just go to S&P. We talked about the S&P a little bit. There's a lot of data out there, and we are going to hit that data. But first, let me turn this off. I'm keeping the new orders up here so that you guys can see how it matches with the recovery. This is the monthly chart. No, let's go to the daily. Let's go to the daily chart. All right. So looking at the daily chart, we got above that prior resistance level. This is a bull market. It's really hard to make the case that we're not in a bull market at this point. We just broke the new highs from the summer, and it's slowly just melting up. Okay, it's slowly melting up. Now, here's the macro forces I like to look at. For one, look at the VIX. Okay, look at the VIX. The VIX represents the cost of equity insurance, or the cost of hedging your bets against the stock market. Well, nobody's making those bets. Nobody's making those bets because of what we talked about. Forward-looking growth is picking up. Two, inflation is falling, which we will go over. But for the most part, we're all the way back down from the VIX. I mean, we're at 12. This is you don't get the VIX at 12 without a secular bull market on the rise. So, and again, it's really hard to make that case. We're back to January 20 levels. This was before the pandemic, by the way, right? This was all-time highs. So what does that tell you? That tells you that there's no downward, I mean, not nowhere downward pressure, but there's a lot of confidence in equities. Nobody's taking that VIX move here. Um, so yeah, the VIX is low, volatility is very low, and that's why when vol's this low, you're going to get a melt up, a slow melt up. It just trickles higher. The stock market just slowly grinds higher. And if you look at the trend of the vol of VIX, right, volatility of the VIX, that trend broke down. And what this really tells you is the VIX going to start rising again? It's the trend of the VIX's volatility, and it's also breaking down. It did have a burst up higher, which was in September and October. And what do we say? October was the bear market killer, and October is where the volatility of the VIX peaked out, rolled over. Now it's headed for new lows. And so this is a bull market. There's no denying that at this point if you use common sense, right? Now, the two big factors here that we must pay attention to are going to be interest rates and the US dollar. And the dollar is the cost of, I'm sorry, the interest rates are going to be the cost of debt, the cost of borrowing. We want that to go lower if you're bullish. And Bill Ackman's already capitulated on his a while back he capitulated. Bill Ackman's a billionaire. He went short the treasury market, so he's long rates, and then he covered somewhere around here. So once he covered, that's it. Everybody covered, right? It's now everybody's buying bonds back to lower the cost of capital. Here's your resistance level. Now, after today's inflation report, we'll come back to this, right? Yields could not make new highs. Yields couldn't get above this resistance level. So that tells me it's going to have to take the Fed tomorrow to get yields higher. Are they really going to be that hawkish? Are they going to hike rates? No, they're not. They're going to stay paused. So yields are done. They likely go make new lows by the end of the week, I think. I think we're headed for new lows, which is going to fuel stocks even further. Now, taking a look at the dollar, that's the next big factor. Now, the dollar was, rising with rates, but at this point, I think that correlation is done. Specifically because inflation is no longer the scare here, right? So rates are not rising because of inflation. Rates are falling, therefore the dollar should fall. But now you go into a growth scare. So if we do see a growth scare, if something does fall apart, then the dollar will start to rise because it's a risk off asset if there's some type of big recession. But at the end of the day, we know the Fed's game plan. What are they going to do? They're going to pump stimulus. Joe Biden's going to come out and pump stimulus, and the dollar will fall. They'll debase the currency in order to pay the debt. They'll debase the currency to get more money supply out there to support capital markets. So I think the dollar goes lower. You need the dollar to rise above this 104.50 level. This is your zone. If it doesn't get above here after tomorrow's Fed meeting, it's done. The dollar's rolling lower without any black swan event. So pretty much we're at resistance. This rollover is the macro rolling over, yields rolling over, dollar rolling over, very bullish macro. Those are the two easiest indicators. And also, okay, you want to look at forward-looking inflation. Well, look at oil. This was the inflation report. This is the price of oil that factored into this month's inflation report that we just got today. And oil basically fell from 81. It finished the month around 78. Is it that simple? I don't know. I don't think so, but I'm just tracking the month by month move. This next month, okay, which is going to be what? December. If December ends up, I think we're headed for 60. So if December ends up down here by the end of the month, by January, then that means the report in January, inflation is going to go into the 2.9% range. And that's going to be even more bullish. So I don't think the bull market stops. Just taking a guess here, right? My opinion, I don't think it really stops or slows down significantly until late January, early February, which would be the next, which will be rolling into earnings season, rolling into the next earnings season. I think that's where we slow down, we pull back, and the market wants to see, okay, how are earnings looking forward? How is guidance looking forward as we head into the Q1 slowdown? And the Q1 slowdown just comes down to the consumer, right? The consumer spends the most in November and December because it is the Santa Claus rally. It is seasonal jobs. It is seasonal spending for gifts, for travel, whatever it is. That will be ending in January. People tighten their belts. They'll stop spending their credit. And so that's where the slowdown is at. Now, if it slows too much, I still think Biden steps in, right? So we got rates down. We got the dollar rolling over. We got oil just this is going to push gas prices lower also. So that's very confident. Remember, this was the scariest chart, the cost of energy, right? And if we also look at nat gas just got destroyed. Like everybody thought this was support, boom. So energy prices, the cost of energy is plummeting. Very bullish for stock market. There is no way the Fed hikes rates. That is over. It is now coming down to, is there a recession? If there is a recession, or if it does come, and that's a dumb way to look at it, the right way to look at it is, are jobless claims on the rise? Are they breaking up out of that level? They are not right now. They're still trending sideways because, like we said, the gig economy is still here. People are not filing for unemployment because they can find freelance work, right? They're finding freelance work. I say it all the time. OnlyFans, people are making millions on OnlyFans, not people, mostly females, but you do have OnlyFans. You do have also a lot of side gigs. I mean, if you go on YouTube, you can see a lot of, oh, how to make money. Those are not payroll jobs. Those are people making money through YouTube, through Google, through Microsoft, using AI, whatever it is. And that economy will continue to expand. And a lot of immigration, and we're going to go over that, immigration's coming in. They're leading the labor participation. And there's a lot of immigrants who come in and they do what? They do Uber and Lyft. It's easy. They don't have to, they don't necessarily need a social. They can get around it. They can use somebody else's social, which is illegal to some degree, but they're still doing it. They're still getting paid. They're still going to spend money, right? So the cost of energy is plummeting, right? The cost of food, this is the wheat. These are just commodities. Commodities lead inflation. Commodities are headed lower. So inflation will continue to fall. We had a little bump today, but not significant enough. Copper going nowhere. The cost of infrastructure is going nowhere, right? It's still low. And I know a lot of people are saying, oh, well, commodities are going to boom. I don't think so because China is still struggling. And when you do get stimulus into the market, that stimulus doesn't necessarily hit the economy first. It hits capital markets first. It takes a while to come into the system. So when do commodities rise? I don't know. My guess would be at the end of Q1, right? If you get more stimulus from the government, which is coming, and when the manufacturing cycle starts to really pick up and we start expanding for the ISM. So when the ISM expands, there's going to be more demand to build, not because of the ISM, but the ISM is telling you that. And then maybe you see copper rise a little bit, right? But are you going to get inflation? No, because we're seeing productivity pick up. We're seeing, and that absorbs a lot of the inflation. So that's sort of the macro backdrop looking there. Now here's a couple stories. Let's take a little break. If you got questions, comments, concerns, let me know. If you are from TikTok, somehow my account got banned. There's a lot of scammers on there, so I can't even log into TikTok right now. So, and that's fine. We'll do it on here. Charts are a little better. So going back to a couple charts. Let's look at a couple charts here. Now, I know what people are going to say. Well, if the Fed does print money, then doesn't that mean our debt to GDP goes up? Debt goes higher. Well, Japan's debt, is the most indebted nation in the world, and they don't even have inflation. Inflation doesn't go higher. It is not money printing that makes inflation go up. It's not. That's a false narrative. What makes inflation go up is broken supply chains. So, unproductive supply chains where things get backed up, plus excess demand. That's not in the form of liquidity from the Fed. That is direct stimulus checks to people. So the stimulus checks could reignite spending because they can spend in real time without producing anything, right? But for the most part, productivity is picking up, so it can absorb that, right? So debt is not the big deal. If this was the case, you would see Japan's inflation sky high, and it's not. So debt is not a driver. It is driving growth and inflation to some degree, but it's not going to drive inflation to record highs. We have supply chains that are working. Okay. And then we have this Bank of America household savings are growing at 8.5%. So household savings are also growing. And I know this is a concern. People are like, oh, well, nobody's moving. Existing, the housing market is frozen. Well, people's houses are also way, 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 way more expensive than they were before, or they have more. Once they refi, they can take out a lot of cash on their homes. Most people are locked in at 3.5%. So you're not going to see a real big drop, meaningful drop in household income or household net worth. Household net worth is just playing out higher than it was. And they're just waiting for the Fed to cut rates to start moving, right? Household liquidity and assets. This is just household assets going forward.com, GFC. They go higher. Fed prints, people are making more money, jobs are paying more. They have assets. So in the macro, you might be able to find a couple stories where people are struggling. That's always the case. People are always make personal decisions. They're going to struggle. But in aggregate, in the macro, overall spending is not going to fall, especially with the wealthy who spend the most money. They're collecting 5% interest, on their money market fund accounts, right? So again, taking a look at I know we're going all over the place here, but the US dollar is hitting a wall. If the Fed meeting doesn't get this above 104.50, that's it. The dollar is going to circle down. And if the dollar circles down, risk assets go higher. That's going to be a huge easing of financial conditions. And down here, this is a 30-minute chart earlier in the day. Down here, same thing. Rates are hitting a wall. All right. So rates hit a wall, dollar hits a wall, they roll over, risk assets go higher, stock market goes higher. And we're seeing the Qs and the SPYs break out. This is my favorite way to just look at which way is the market headed. That can change the correlation, but for now, that's what we're looking at. Okay. Now, inflation. Let's look at the inflation report. If we look at the year over year change in inflation, this doesn't tell you what it is, but we are looking at 4%. So it was flat from last month. 12-month annualized. You can see it barely here. It's pretty much flat. Now, am I concerned about that? CPI? Not really, because we know oil is still falling. We know the economy is set to slow in Q1 and Q2. The consumer is slowing. So they're not going to spend as much. The last burst of spending is this month. So January CPI is going to be lower. And then February is really going to fall off a cliff. And I think we get the Fed to target. And there's a lot of belief that the Fed will actually cut before we get to target 2%. They cut before that because if inflation falls too fast, there goes growth also. Okay. So if we look at 3-month annualized inflation or CPI, because they measure these they measure month on month, they measure 3-month annualized. So you take month on month at the last 3 months, and then the last 3 month on months, and you measure that. And we're looking at what 3-month annualized is what? Did he put it up here? I think he did. 2.9 November from 3.2. Well, anyways, I guess he didn't. Well, this is 2.9. We'll find it. 2.9% for 6-month annualized. So if you look at the last 6 months here in blue, there we go. This baby blue, this falling line, last 6 months, it's at 2.9%. So by February, my guess is we will be much closer to target for the Fed. And the targets are all over the place. We don't know exactly what the target's going to be. But for the most part, inflation is still trending lower, which also makes a lot of investors were fearful that inflation would rise again, and it's not happening. Oh, this little bump in 3 month. Okay, great. That's not much, right? That doesn't tell us too much. Nothing to worry about there. Also, this chart, right? Equity net positioning. I don't know how accurate this is, but what it's telling us is net fund managers stock exposure is still, it's barely climbing above zero. And we've showed this before, which is margin or leverage. It hasn't even came in the system yet. I think that leverage really starts to hit once I think that leverage really starts to hit once yields start to roll over more, dollar rolls over more, and you see a real big rise in and we break to all-time highs because a lot of people will capitulate at all-time highs and say, okay, the bull market is on. I say the bull market starts when the trend doesn't break, the uptrend doesn't break. Other people wait till all-time highs. Other excuse me, fund managers wait till all-time highs. So basically, positioning is not over positioned yet. It's still at break even. Once we get over positioned, then you can say, okay, we might slow down here over the next 6 months. We're not even there yet. So we're still expanding, or there's still a lot of cash on the sideline. And how much, you got to think, how much of that money market fund cash is going to flow back into markets? I think it's already starting to flow into markets as we get there. So some fear. Here's some fear that I was looking at yesterday. This is the default rate financial crisis. Oh, this is hilarious, right? See if I can click on this. Why isn't it letting me click? It's weird. Okay. Anyways, default rate above financial crisis levels. Well, if you read, oh, there we go. If you read the small print, okay. So if you read the small print, there we go. These are not among the 100 largest size by assets. What this means is it's kind of it's kind of a trick. It's tricky to look at this. These are the small banks. Okay, these are small banks. Nobody cares. These are not too big to fail banks, and that have these assets. So these are the lowest tier of banks. Who cares? Who cares? Right? It's always the too big to fail banks. J.P. Morgan, Wells Fargo, Citibank. What do we got? Goldman Sachs, Morgan Stanley. If they, the systemically important riskier banks, if they have issues, do we have a problem? So this is kind of a false chart. It's true, but it doesn't give you the whole story, because if you look at the fine print, it's very small banks and nobody cares. The market isn't worried about small banks. It's worried about the systemically important banks. And that is just not the case. Okay. Next. Oh, we talked about debt a little bit. Let's climb back up here. Talk about the inflation report a little bit. So the biggest driver on the this is the month on month inflation. The biggest driver, which is kind of, it kind of sucks here, is used cars and trucks, right? So that was the month on month reading. But here's a way to look at it. If you look on the year over year, this is just a bump. It's been negative. So used cars down here on a year over year still negative. So what's really happening is it was super negative, is very negative, and it's just rising. So as it rises over the long-term trend, it bumps higher on the month over month, but it is just a small bump. It's a bump and it rolls over. That's what's going to happen. It bumps and it rolls over. Used car prices are still elevated for consumers, but the market's not worried about used car prices bumping up. They're still negative, right? Energy we know is negative. Oil's coming down, gasoline prices are coming down. Okay. Apparel really dropped on this one. So, anyways, month on month, transportation services have been an issue though, but it's one reading. So transportation services, car insurance, very elevated. That might be a little more stickier, but it's one segment. And this is month on month. Everything else is flat. Everything else is falling. Food and beverage, core for the most part is still falling. And remember, this was November. So use common sense. A lot of people don't use common sense. November is the biggest spending month of the year. You got what do you got? Cyber Monday, you got Black Friday, you have a lot of travel for a lot of people traveling for Thanksgiving. You have all the deals. So people spend the most in November. You're going to be your highest spending month. Everything else should start to fall. On a year over year basis, down here, transportation is at 10%. That's terrible. That is terrible. I don't know. When does that come down? I'm not sure. But as oil continues to get back to 60, these costs will fall because gasoline prices are falling. Again, February is, I think, the month where we see inflation drop dramatically. I think it's going to be February, and the reason I say February, because we're going to get January's report, and January should be a lot weaker compared to December and November, right? So February, I think, is the month where we head into that month. It's going to be earnings, things slow down, and then we see the CPI report, and it's very low unless oil starts to surge. Boom, we're back up again. So I think this is a very strong setup for a bull market. We already talked about net profit margins starting to rise back positive, and actually higher than the previous 3 years, almost as high as it was during the pandemic. Earnings are starting to rise also. Let's see, what are we missing here? Household savings, we got over that. So that's the macro charts. The economy is still strong. The jobs market is still very strong also. So we're not seeing any weakness there in the jobs market because of the gig economy and because AI is increasing productivity. And that's the key. This is a productivity rise. Plus, if anything does break, we will. I mean, I can't say we will. It's my opinion. I think we do see Joe Biden print money. All that his approval rating is so low. And what do politicians do? They print, or I don't want to say just print. They give out handouts, right, for votes. So you're going to see more stimulus come into the market. All commodities are falling. So forward-looking inflation is done. Inflation picture is done. Tomorrow is the last chance, right, for the Fed. Are they going to be a little hawkish? Yeah, because housing is still stuck. So they don't want to be too dovish and unravel financial conditions. But the last chance is the dollar going here. All right. So let's go ahead and switch to the technicals. Let me make sure we don't have any more macro stuff to look at. Oh, here's some other stuff. Triple B spreads. This is corporate debt, right? The cost of corporate debt is, well, people are piling into corporate debt. This is versus government debt. And this tells you that as it falls, there's no risks. These are the big risks. This is people unloading corporate debt because they're unsure that companies can pay off their debts. Well, it's actually unraveling now. So they're sure, there's a lot of confidence that corporations can keep climbing and that they're going to, their cost structure is very low. Like I said before, a lot of corporations, most of them, despite what you see, have locked in low rates back in 2020. So they don't have to refi for a while, and that corporate debt is looking good. Plus, profit margins are rising, so that is also a positive. And if you want to see like a pure chart, HYG, I think it prints about 5% interest, and so corporate debt is now moving up. It's been moving up pretty strong since October. This was the bottom of the bear market, and so corporate debt, high yield corporate debt is rising. So that's also positive. And you have this rising with high rates. So let's say you own corporate debt, you're yielding 5%. That's more cash. That's more cash flow. You park it in cash, you're getting 5%. That's more cash flow. Hope you get a stimmy check. Yeah, everybody's going to hope they get a stimmy check. I mean, regardless of individuals, though, it's going to pump the market. The market's going to see that stimulus, I think, at some point. And it's not to, as long as supply chains are positive right now, the supply chain pressure index, which measures the pressure of supply chain. So to make it quite simple, I think I have it on here actually as a chart. To make it quite simple, if supply chains are stuck, then prices rise. If supply chains are moving, if they got oil, well, not oil, if they're moving, if supply chains are moving quickly, that means they can pass the the cost go. Here it is. So you could see it got up to 4.3%. That was extreme. Remember when the ports in California were stuck? That was when we peaked. Nobody could get their stuff. Everybody made orders from China, India, whatever it is, and those orders never got delivered. Therefore, prices start to rise because there's not enough supply, and middlemen still have to make their money, so they rise their prices to meet their obligation, to meet their incomes. Now they don't have to do that. Everything is moving smoothly. There's no supply chain pressures. Okay, there is no supply chain pressures. So that's very bullish also for the market going forward. All right. Now let's look at let's go. If you guys don't have any questions, we'll jump into some of the technicals here. I think this is a good chart to look at. What is this? No, not that one. Here it is. Right. This is how many stocks are moving above their 50-day moving average. So that was a sharp increase, right? You have 85% of stocks, and it looks like today we're actually still moving up. 85% of stocks are moving above their 50-day moving average. What does that mean? Technically, it means that market breadth is expanding. So it's not just the Magnificent Seven leading the market. As a matter of fact, yesterday was the first day in a long time that the full Mag Seven, Amazon, Apple, Google, Facebook, Tesla, Microsoft, they all declined and the market still went higher. So there is a rotation happening, and that's healthy for the market because people are picking up everything. They're picking up anything they can get, right? They're scraping from the bottom. And if you look at XLK, which is a S&P technology ETF, it's at all-time highs. It's been breaking out. So this is another signal, XLK, of a breakout. Market breadth is here, right? Market breadth is here. All right. So Qs, I think they continue to run this rally, or the Qs will continue to lead this rally going forward. Maybe tomorrow we pull back a little bit. Who knows? But the Fed meeting is the last, is really the last catalyst to launch us higher, in my view. A lot of cash on the sideline still. Oil is declining. It's pretty much a bull market. And so yeah, that's the backdrop so far. Tesla has been lagging. Okay, Tesla's been lagging. I don't know if you guys want to take a look at. Throw me some tickers if you want to see. Tesla's been lagging, but there's a monster flag pattern, bullish flag pattern that Tesla's setting up for here. Okay, and you can see in the past, the last time and it's unfortunate that Tesla is dragging, but the next catalyst is going to be production numbers, right? That's what everybody wants to see. Those come in January. So they should be early January. It's typically a month before they report. So once they report those production numbers, maybe the stock runs up before those production numbers. I think that's what happened last time. It ran up before the production numbers. Either way, you have a nice pattern, big breakout, and I think we're going to get a breakout. Can we pull back before that? Sure. Okay, we can pull back before that. RSI is at the middle 50 level, and it is not. It's a lot weaker than the overall market, but Tesla is moving up. Let's look at the moving averages. So if we're on the daily chart, we can see that these moving averages, the 50 moved above all the moving averages. Now you got the support off the 100 daily moving average. Does that mean that it's going higher? No, but it tells you there's support here. And there's a big area where they've been grabbing. I've been watching it where, investors are grabbing at, I think, somewhere between 235 and maybe 230, right? That's been your support, 235, 230. That's how I would see it anyways. And we came off that support. So we've had plenty of support off this level. Let's draw that out a little bit. Okay, I mean 1, 2, 3, 4, 5, 6, and then today 7, 8, 9, 10. I mean, there's a lot of support here at 235, 234. And guess what? You have the overall market in your favor, and this is probably the most lagging stock right now of the Mag 7 of the big stocks. It is the most lagging. The rest of them have already made their move. So Tesla's still waiting to make that big move. And I think it comes. Let's look at the RSI for relative strength for the weekly chart. I mean, that looks beautiful. That looks absolutely beautiful. We've already broken out of this downtrend and we supported it twice. Okay, we supported it twice. Boom. Got support there, got support there. We're lifting off. Can we pull back? Yeah, maybe we pull back in the 200 at 227, real sharp move higher. But tomorrow's the Fed meeting. Inflation's coming lower. We got PPI lower. After that, it's all technical. And we need one more catalyst for Tesla also. You're gonna need another catalyst to really get it launching. But it's been consolidating for a while, so I do expect it to run up. Okay. Let's see what this looks like intraday. We'll go to that 30-minute chart first. And you know what? It does look like we are melting up too. This is like the slow melt up, right? It's just slowly melting up because inflation is down, productivity is picking up. That means we can get more growth without inflation. AI is actually working. Less, unit labor cost also, which is labor cost all around, are all also falling while growth is picking up. So S&P is slowly just melting up. There's probably a lot of people coming in to pile into this trade. But I did want to see the RSI here because it does look like it's overbought. I mean, it is at the overbought level. But if you remember back in July when we had that run up, you can stay overbought for a while. There's a bigger pullback here because it got very elevated, but it can stay up here for a while. It could just drag itself sideways, and then we'll get a pullback. But tomorrow I think is the launch pad. Tomorrow the Fed speaks. They're going to give expectations going forward. Nobody's expecting a rate hike. And I just don't see what slows us down. If anything, we probably come back into the 50-day moving average somewhere around 457 if there is some type of risk. There's always risks in the market, but the trend is higher. Same thing for the Qs. Maybe they just come back, keep grinding higher in that way. Look at the Dow. Oh, the Dow has been launching off too. So the Dow also, this is a lot of market breadth. The Dow is how close from all-time highs? All-time highs are at 369. If you're looking at the ETF, we're at 366. So the Dow's ready to go to all-time highs. This could happen by the end of the week. And then you have small caps. A lot of people are bullish on small caps because they're so far from the all-time high. And I think Tom Lee said he thinks small caps actually lead the Qs into this rally because productivity is picking up, earnings growth is picking up, and the rate hikes are done. The Fed is done hiking. So you have that on board also, right? Flipping to, got a comment there. What up, Tigger Media? Have been waiting for a pullback to enter CrowdStrike for weeks, and it never pulled back. Okay, CrowdStrike. Yeah, CrowdStrike. I think there's a big bid on cybersecurity. CRWD, right? CrowdStrike. Yeah, cybersecurity there's a lot. Oh man, that thing is vertical. Yeah, there's a lot of demand for cybersecurity because this is the new war. There's not going to be no World War III. It's basically a lot of cyber attacks, and whether it's fiscal, whether it's corporate, there's a big demand to protect these systems, right? This thing already broke out of the trend. It's getting elevated. Yeah, it'll have a pullback at some point. It will have a pullback, but CrowdStrike just slowly grinding up, very elevated. We'll go over a couple other cybersecurities also that I kind of know in the back of my head. You got CrowdStrike, cybersecurity, right? Almost at all-time highs. Maybe gets another pullback here at 235, maybe 203. That would be nice if we got to 203. So you have CrowdStrike there. Let's see what the daily looks like. And it's getting this is a lot of momentum because it's above the trend and it's just holding. Probably bounces off that 50-day moving average. It's a little extended though. You also have a Zscaler. Zscaler is another cybersecurity name. Look, they're all flying. And that was a big head and shoulders too, reverse head and shoulders for Zscaler. Big reverse head and shoulders there. There's your shoulder, there's your head, and then it was a small little shoulder. It pulled back a little bit, broke above previous resistance, and it is climbing. It doesn't look like there's any resistance for a Zscaler. See, where's that next resistance level? Around 250, somewhere around 250. So this has a way to go. If this thing pulls back, it could be a nice ride. All right, so there's Zscaler, ZS. You also have Okta. Oh, Okta hasn't moved yet. And I don't know the fundamentals of Okta. This was a very popular cybersecurity play. I remember back in 2017 to 2018, it just launched. It was very explosive. It's very fairly new business. But yeah, Okta, I haven't looked into the fundamentals, but Okta is another cybersecurity play. Used to be one of the best cybersecurity plays, but you can see there's a clear, this is where it got sold off right here, really strong. You had that upside move, and then it got destroyed by by big institutions here. So there's your resistance. What is this? 88, 89, 90. So once you get back above 90, Okta should launch from there. Another cybersecurity play. You could also throw Palantir in there to some degree, as a cybersecurity play. We'll go over some other individual stocks. But I think it's going to be a stock picker, or I like to say asset pickers market. And the reason I say asset, because you also have crypto, right? Which I think has the most potential going forward. A lot of cryptos are moving, but Bitcoin is up a lot faster than I thought it would be. Let's get rid of some of these. Yeah, so Bitcoin's up a lot right now, and we haven't even had the ETF come into play yet. It'll get passed. I know Elizabeth Warren. I think this pullback was from Elizabeth Warren trying to file some illegal blah 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 blah. She's a Karen, but Bitcoin is looking good, and you always want a nice pullback. It's pulling back, right? Even if you come down to here, 38K, still pretty solid. My price target before we jumped was like 37, so we got past that pretty quickly. So, and then crypto goes vertical, and it trades over the weekend, so it can still climb. But Bitcoin is pulling back, and is this an opportunity? Yeah, sure. It depends where you're at and how you're trading it, but the next resistance isn't till and if we get over this, it's gonna be lights out. I'd say your next big resistance is right here for Bitcoin. So I think it can run up in here. And I know it got a little overbought, but that's already came back down, right? So it can just hold this overbought zone above the 50% mark, RSI, and still climb. So it might get a 52 into the actual ETF release and then sell off. Could be a buy the rumor. It's not really a rumor. I guess you could call it a rumor, but buy the rumor, sell the fact. But we know the supply is going to get cut in half in 6 months. We know that there's a lot of institutions ready to inflow into this, so we should be good there. Now, Ethereum looks better in my view because it's already pulled back into the previous zone, right? It's already pulled back into the previous zone, starting to support it a little bit. 100 daily moving average, 50, it dropped to 50, maybe comes down to the 200, maybe about 2000, it bounces around 2000. So Ethereum looks pretty solid there. Back to tech stocks. Let's see how the rest of the market is faring. ARK. Let's get rid of some of these. Okay, so ARK is still consolidating, right? You got to clear. Let's go to the weekly, start on the weekly chart. You got clear resistance here. This has been a long-term resistance also for ARK, all the way back from 2018. So you know risk assets are on once ARK breaks out. This is it right here. Above 50, I think it's pretty clear. Above 50, ARK is gone. You could call that a pretty sloppy reverse head and shoulders. It's a bottoming pattern. It's climbing higher. A lot of volume that came in too. So ARK is on the climb also. And that just means, what are the biggest holdings in ARKs? It's Tesla, Zoom, what is it? Unity Software, Roku. So Roku, Zoom, and Tesla. I don't know too much about the other companies, but Roku, Zoom, Tesla should do pretty well once ARK breaks out, or they're correlated together. Apple, the big stock, right? Apple's bigger. Now, here's the thing about Apple. Apple is larger than the entire small caps. Maybe not now because small caps rose, had a big rally, but Apple's bigger than the small cap. So this is a bellwether for the entire stock market. Apple's back to all-time highs. My guess is the Fed meeting goes pretty well tomorrow. I mean, what are they going to do? They're not going to hike rates. The only defensive thing that the Fed can do is really say, we're not going to cut as soon as people are saying we're not even thinking about cutting rates. They'll probably say that, but they're also going to say we're not thinking about hiking rates. They'll just say we'll hike rates if inflation gets out of control, but there is no sign that inflation's getting out of control. It's still decelerating, just not at a fast pace, which is actually good because the slower it falls, that correlates with a stronger economy. If it falls fast, the economy is probably going to weaken faster, right? So a slowdown in inflation isn't, a slow drip in inflation isn't necessarily terrible, right? You do have some commercial real estate risks though. And I just don't think they're big enough to really send the market in a down spiral. And if they are, the Fed bails them out as they did before. Okay, Amazon, nothing but green for Amazon for a while. Actually, this is a little dirty chart. Let's get this stuff off. Right. So Amazon really has this all Amazon. You could compare it to Tesla. Still hasn't really broken out yet. Still hasn't broken out. So here's that level. We're looking at 145 to 150. And there's a lot of capitulation down here. Look at these candles. I mean, there's buyers stepping in. Comes down. They just absorb it, right? Because Amazon is a big player. What did they do the other day? They shut down Venmo from transacting. I like to call this a gatekeeper stock or a gatekeeper business because they're the gatekeeper to other to a lot of the demand. So if you're on the Amazon marketplace and you have Venmo, it's pretty much useless now, right? It's pretty much useless. So Amazon is controlling that network. Big network effect there for Amazon. And also they have a new AI. They have a lot of AI stuff coming out. And once the consumer gets back on track, Amazon, like, let's put it this way. If we do get stimulus checks, Amazon's going to explode, just like it did back in the pandemic, this in Zoom, and it exploded because people were buying a lot of goods. They were buying a lot of goods here. And I think the services might slow a little bit. FOMC meeting Wednesday, 2 p.m. Eastern. Excuse me. So yeah, we got Amazon ready to break out. Amazon has room to run. Yeah, Amazon has room to run. I mean, if that's a reverse head and shoulders, if I ever seen one. And that's a big one on a big time frame. Holding that 200 weekly moving average also. All the moving averages are pointing higher. A lot of steepening. Okay, Google. See how Google's looking. Man, Google is supposedly leading AI. Okay, and it's still consolidating. This is really positive though. The market's moving up and the Mag 7 are just moving sideways. So what does that kind of tell you? That the move up in the S&P is due to probably financials, a lot of other stocks that are not Mag 7. So this rotation out of Mag 7 that we've been seeing for the last couple of weeks, it'll roll back into the Mag 7. It'll come back in here, especially as rates fall. As rates fall. And remember, these companies have so much cash that they can still yield more cash and fund their own debt. So they're pretty much recession proof. They are pretty much recession proof. I mean, this is YouTube. YouTube ain't going nowhere. People are making more money on YouTube. Advertisers are still going to YouTube more than any other platform. And if it's not YouTube, it's Instagram, it's Facebook, which is Meta. And Meta is also forming. Now, Meta doesn't have the prettiest flag patterns, but it is also forming a flag. You said something about Robinhood. Oh, yeah, yeah. We're going to get to we'll jump over to the fintech space also doing well, especially with crypto on the rise. So yeah, Meta looks good. We know Microsoft already made all-time highs. Okay, so Microsoft just chugging along there, big market leader, also $1 trillion, $2 trillion company, right? So Microsoft's already at all-time highs. If it pulls back, then if it does pull back, we're looking at this level somewhere around here. Actually, let's bring that down. Yeah, this is strong. Very strong stock there. There's your support. There's your support for Microsoft. Don't chase. 350. Looks like 350 is a solid level. All right, I'll skip down to fintech since you mentioned it. We start with Square. Oh, yeah, Square is a big piece of ARK too. See how they look like ARK? I mean, there's going to be huge inflows once you get this pickup. Yeah, FOMC tomorrow. I'll be covering it live as usual. I'll be covering FOMC, excuse me, live as usual. Finally getting my voice back. And we'll dissect with. I think it's going to be sort of a non-event. I just think the market's just waiting to see what he says. It's a non-event. We're consolidating at the highs. We moved up ahead of it. So you got what? Robinhood had a great run past week. They opened up crypto trading to Europe. Yep. And they're about to go 24/7 trading. They're about to go 24/7 trading too. So who is Block or Square exposed to? Small entrepreneurs and somewhat crypto, right? On Cash App. This is Cash App. So Square should do well. Maybe, I mean, they're going to do well. It's one of the top fintech companies. But do they have are they going to benefit from crypto the most? Probably not. Now you have SoFi really forming this very strong flag pattern. This is strong. Now SoFi is looking good because this is going to be a lot of momentum if it gets above 8. It's holding 8, so that's good. Holds 8, gets above 850, gets back to the highs pretty quickly. So SoFi looks solid. And those moving averages are kind of consolidating there. Robinhood. And we are on the weekly, so these are big bars. Robinhood had a big run up. I mean, it had a pretty big run up, but the real breaking point is up here. I mean, this is just a big, big monster zone for Robinhood that it's been in for a while. So once you clear the zone, that's it. I mean, it has some more at like 15, but yeah, Robinhood looks pretty solid. And as crypto rises, I think they have they have the cheapest fees for trading crypto. They don't charge as much as Coinbase. So people are going to flock to Robinhood. They're going to probably trade Dogecoin. Hopefully not this cycle because Dogecoin is trash, but they'll still do it. And they have a lot of new features too. The Roth IRA, or not RA, they got the Roth on there. It's like a 1% Roth account. They have they're going to do 24-hour trading. You can lend your stock. There's a lot of new features on Robinhood, changing the game there. PayPal. I know people are still eyeing PayPal, but what was the issue with PayPal? It should break out at some point. The issue with PayPal was just that Amazon canceled Venmo. And look how suppressed PayPal is. This really had an issue. This must have really had an issue here. But crypto trading is going to be huge. This must have really had some bad. I don't know what it was. I don't know what it was. I haven't looked into PayPal. But if that issue gets resolved, maybe in the next earnings, it should have a nice run. And I'm not interested in PayPal because I think this space is saturated, way too saturated. But typically, it's pretty oversold and it should bounce at some point, right? So those are your fintechs. There's probably some other fintechs out there. Onto the semiconductor chips, who are always going to have a bid because the race right now is the race to better technology. You need chips for that. And Nvidia has also been consolidating for a while. And it's starting to move off the 50-day. It is now starting to move off that 50-day moving average here in green. Couple wicks there, starting to hold that previous level. If it does break down, I mean, I don't know. There's just so much demand for Nvidia. There's a lot of demand for Nvidia. They're probably selling calls up here, and then once we get clarity on, once we get fiscal clarity, we get monetary clarity, Nvidia probably rises again. Now the big monster has been AMD, right? This has been the big monster. You see, we've been charting it for a while. It's just a monster, big wedge, not the perfect wedge, but it is breaking out now. And I missed the boat. I'm focused on Tesla right now, but AMD was probably my second best pick when it comes to just stocks on a technical basis for a leap call, and it's riding the wave. So, I mean, what I would like to see is, probably won't get into it anytime soon. I would like to see it pull back into that 50 EMA, something sharp, and because it's making new highs, right? It's making lower, it's making higher lows, higher lows, and making higher high. Now it's making a higher high. So I want to see that pullback. It's either going to be into this previous resistance or this support. It's a big zone though. It's a wild stock, but they're coming out with a new chip. So yeah, AMD looks great. It's gonna run when AMD runs, it runs also. So AMD is one of those great plays. TSM, this might be a good laggard. TSM's been lagging. It's finally above 100 again. I ran up quickly. So yeah, TSMC, they're building that here in the US. A lot of these factories are in Phoenix, where I'm at, to build more chips, onshoring, more jobs, more jobs. All right. And then let's go to Adobe AI play, right? They're doing a lot of stuff at Adobe. So Adobe looks great. Not a great chart. It looks like NVIDIA, but Adobe's on fire. So this is part of the AI revolution also. Adobe, this is part of the gig economy also, right? A lot of people doing what graphics, or not graphics, but videos, anything with entertainment, online entertainment, they're using Adobe. And I'm interested to see Canva. I think Canva's something that's going to be big. So yeah, this is another AI play. Oracle got smashed today. I don't know what the news was, or I think they just missed earnings, but Oracle also got smashed there. CRM starting to break out again. Salesforce. Okay, I want to say CrowdStrike, but yeah, Salesforce breaking out. So what do we got here? My prediction is Robinhood creates the first AI-based trading platform competing with TradingView and TOS. Wow, that would be great. That would be great because Robinhood, it is super user friendly, but they don't have all the trading stuff on it. That'd be great, and people are going to be trading overnight. Vlad is doing a great job with Robinhood for sure. And Robinhood has that big base. That's the thing. Look at this base. I mean, the bigger the base, the bigger the breakout. So if this, once crypto starts to move, I mean, you're looking at Robinhood quickly move 100%. Like it can quickly double here, right? Not financial advice, but when you get these big basing phases, I mean, that's a big basing phase. Everybody's buying this, right? It's not going to drop. And who knows? Maybe, I don't know. Maybe Warren Buffett, Berkshire Hathaway is interested. Who knows? Maybe if it failed, maybe not now. But yeah, Robinhood has a big base. So I mean, there's nothing but air over 15. There's nothing but air. Back to IPO. I'm guessing this comes in the summertime. We're going to see a big rip, especially if you get direct stimulus checks. TOS is a Thinkorswim platform, which is now owned by Carl Schwab. That's why I stopped using it because they messed up all my settings. I was like, nah, I'm just gonna use TradingView. So Schwab has it now. Let's see who else we got. Shopify. Do we look at Shopify? Yeah, Shopify. Another gig economy, right? People, what is it? Drop shipping. Like this is what I mean by the economy that is stronger under the hood because you have AI increasing productivity, creating new ways to create revenue through Adobe, I don't know the whole dynamics of Adobe, but I know it is part of the AI gig economy, hustle economy. Oracle, more so, not so much Oracle, but also Shopify, right? Drop shipping, e-commerce network. So all these are benefiting, and I just don't think we're going to get a slowdown. Maybe in commercial real estate, but people need that. We want to slow down in commercial real estate so people can get some houses, right? Rates are way too high. We just did that video yesterday, and and rates are for housing, it just doesn't add up. You can't turn a profit in this environment, so people are finding a way to park their money somewhere else, so they're in CDs. But hey, once we break all-time highs, once the inflation threat is over, that's it. Now I think this is still one of the best opportunities because this is a B2B here. Zoom, if there's one thing I really like, because it's Kathy Wood's one of the biggest positions, if ARK moves, this breaks out. And I've been bullish on this for a while, but I got out because it just took too long. And obviously, I was trading options and the theta. I didn't want to take that theta risk, but it's now above those moving averages for the first time on the weekly. And you're seeing what is the word? You're seeing these 50-day, the 100. You get a triple golden cross here, or a double golden cross. Golden cross. Oh, it's a triple golden cross, right? Here's what I mean by the triple golden cross. A lot of momentum. Okay, you get this cross here, 50 above the 100, 50 above the 200, and then that 100 starts to drag above the 200. So this is bull territory for ZM. They have a very good balance sheet. I think it's traded at 14 times, which traders don't really care about multiples, but the multiple is amazing. If I wasn't so stacked into Chainlink, I would probably be buying some Zoom calls. Yeah, especially if the Fed cuts rates, but they have a really good business model. It's just very suppressed. I like Zoom a lot. I really do like Zoom a lot. Teladoc, I don't know about Teladoc. Teladoc looks like PayPal. Very big downtrend. Just got murdered. They got some issues there. You also have Twilio, another AI play for. I think they're going to be working with Amazon. So once this breaks out, it looks like ARK. Once this breaks out, it's going to be nasty. But you need lower rates. You need better growth. When the ISM gets above 50, that's when these really start to launch. ISM above 50, in my view. Open Door still struggling. They're probably going to be struggling for a while. They're losing money on houses. ENPH pulling back. Coin. I think Coin's another one. Oh, Coin broke above the level. Okay. This should be nice. Coin got above resistance. Oh, so here's a pick that I really like. Okay, so was it regulators just passed man, I wish I understood how to explain it a little better. Let me see if I can find it here. They basically passed regulation, FDA approval for gene editing. FDA approval for gene editing. And CRISPR, it's debatable, but CRISPR is the most advanced company when it comes to, it's out of Switzerland, I believe, the most advanced company when it comes to gene editing. The potential for the market is insane. They did that with the CRISPR. Now it's called CRISPR Therapeutics, but the actual tool is a CRISPR tool, and they were able to edit out sickle cell from this lady. She had sickle cell disease and they edited out her gene and now she's not sick anymore. So what does that do? That crushes, I think what it does is it on a secular basis, pharmaceutical companies are in trouble. Big pharma's in trouble. Forget all the medicines and all these, draining people's pockets. This is one of the good innovations. Hopefully it works right. There's going to be some risks to it, but I mean, this thing can fly. The total addressable market is probably in the hundreds of billions. I think it's sitting around 4 billion market cap. So this has a huge total addressable market. It's just really hard to understand the research because we're talking we're talking bio DNA genomics. Like, I don't know how to read that stuff. You have to trust somebody and you have to trust multiple sources. But I've been bullish on CRISPR for a while, and I think it ran up into the FDA approval, and now it's pulled back into the FDA approval. So this is a good. I think it's a good zone. It's holding that 200 daily moving average, and we'll see how that goes. I'm also interested in Cooler Technology. This is a micro cap. Cooler Technology made a new low today. And I mean, usually I wouldn't say I wouldn't be interested in micro caps, but I've been watching this for about 3 years now. And they're the most advanced in battery technology. NASA's used them for years. The Army's using them. They need more contracts, but they do battery technology. They basically make sure batteries don't overheat, and they supply different features for batteries for energy storage, and that's going to be a huge market also. So it's getting destroyed, but I mean the market cap. Check this out. It's about 35 million. It's a micro cap with a huge total addressable market. If they capture 1% of energy storage, this thing I think does 100x. I don't know the time it does it, but it does 100x. You got to look at the fundamentals though. The fundamentals, revenue growth is, I mean, they have a lot of revenue growth. All they need is more contracts, and if they are the top tier, technology for battery storage, when it comes to the specific, for defense, if they get a defense contract, it's over. It's gonna boom. So I started scaling into this. Not financial advice, my opinions, but I like it. It's probably the only I'm sure there's other micro caps, but this is the only one I'm actually interested in because energy storage is one of those secular trends, right? You have AI, you have genomics, you have blockchain technology, you have robotics. Oh, we can look at some robotics plays also. Robotics, 3D printing. I think Tesla takes over a lot of them, but you have 3D printing and you have energy storage. Tesla's an energy storage, but it's an 800, 700 billion market cap. Cooler is a 38 million, right? So SSYS, 3D printing platform. I think there's a lot of regulation that needs to be done here, but we are headed into a very, we're headed into efficiencies. I'm sorry, we're headed into economic efficiency where because rates are higher, we have to find better ways to produce houses, to produce and manufacture goods at a lower price. And if you could 3D print them, I mean, that changes the game. And they've been around for a while. You can see them, they spike and then they come back down. It's a lot of hype. It's not consistent. I would never do options on it. And then you got Triple D 3D Systems also. Wow, this got down to $3. So these things move a lot. Yeah, those are the big exponential plays. All right, any questions? We've been on an hour. We got any questions? I wanted to reiterate. Oh, you know what? I'm sorry, I didn't even do Chainlink. We didn't even look at Chainlink. Let's check this out. So Chainlink, and I just want to make this clear. Chainlink, I think, is the best opportunity in crypto. And a lot of altcoins are they're obviously very risky. You don't know the use cases, but this one has a very clear use case here. And basically, you have the world's largest asset clearing corporation, DTCC. Go look that up. DTCC clears, basically is the settlement layer for the United States. It's the biggest settlement layer. It's a private institution, and they settle all the transactions for the Federal Reserve, for SWIFT, for U.S. Treasury market, the U.S. equity market, the real estate market. They settle all the transactions. All the dollars flow through here. Last year, they settled what, $2 to $4 quadrillion and they are now integrated with CCIP, which is the biggest feature for Chainlink, right? So what does that tell you? That tells you got real institutional demand. Back down to 11. Yeah, we got real institutional demand for Chainlink. And there's everybody else has all these stories, but this is actually happening. This is not a, oh, this might happen. This is actually happening. A lot of institutional demand. You also have the Swift network using Chainlink. I know Fishy Catfish has some good stuff on here, some updates. What do we got here? Protocol Matter Lab Chainlink announces price feeds. Okay, more price feeds. And the total addressable market, oh, Euroclear, this is another bank using Chainlink. It's in Europe. I mean, these are the biggest financial institutions in the world, and they are using this protocol in real time. Deutsche Bank, Citigroup, JP Morgan too. You know, the funny thing is that JP Morgan, or what's his name? Jamie Dimon says that what crypto is trash, but yet JP Morgan partnered with Chainlink. That's hilarious, huh? So he probably means all the other ones. And you said what? Would you say Carbide said we might get back to 11? Is we'll look at the technicals there for Chainlink. First thing I like to look at when it comes to when I'm looking at Chainlink is ETH to BTC. Actually, let's clear this out. Not ETH to BTC. Chainlink versus Ethereum. So this is, you can see in the last cycle, Chainlink moved very strong against Ethereum, and it peaked out early in August. So it's probably going to peak, not price, but peak versus Ethereum and Bitcoin before Bitcoin. It'll peak a lot quicker. It's a fast mover. So you can see it already broke out against Ethereum, and now it's holding that previous level. What is this? Well, I'm not going to give a number. We'll just look at it. So it's holding that previous level. Still has a lot of room to move against Ethereum, to gain against Ethereum. And if we look at Bitcoin, it broke out against Bitcoin. Now it looks like it's coming back down, and it's broke before and came back down. So just keep your eye on it. But remember, there's a lot of institutional demand. We've never seen this before for any altcoin. We've never seen any altcoin have this much institutional demand. Oh, my bad. Got caught up on the screen. So Chainlink versus Bitcoin, right? Breaking out against Bitcoin there. And again, just keep in mind the biggest financial institutions in the world, the Swift network, every bank, every real bank that's going to, convert to real world assets, all of them are doing it. DTCC, the settlement layers for the US, for the Fed, for equities, right? And just to make it simple, these are behind the scenes systems that the way you get to tokenize real world assets is through these different institutions, and they are all adopting and partnering with Chainlink. And that's why I think I'm the most bullish on Chainlink. Now, do I know for sure that it outpaces every other crypto? I don't know, but I do know it has real demand and a real use case, the biggest use case. Tokenization of all real world assets. That's the use case. Chainlink versus XRP broke out against XRP. And let's see, ETH to BTC is still kind of lagging. But anyways, going back to the Chainlink price itself, it had that big move. Had this big move here. Let's go ahead and take this off. Take these SMAs off. Let's go down to the daily chart, right? So it is on this trend currently. Let's make sure we're on a log chart. Yeah, we're on the log chart. We're on this trend. And at Carbides, Carbide said we might break down to 11. This is where all the demand's at 11. So that would make sense if we come down to 11. Let's see, let's mark it. Big demand here at 11. And I don't know if it goes that low. I would say the other support is right here, which is right on pretty much on the trend, 13. Unless Bitcoin breaks down hard, I don't see it going to 11. I think we come back down to 13-ish, somewhere around 13, probably capitulate. But we could come to 11, right? It just depends on how big the correction is in Bitcoin and Ethereum. How big is the correction? So keep your eye on Bitcoin and Ethereum as they lead the cycle. And right now, Ethereum is pulling into support, but we all know crypto can really crash hard, and that's only going to give a better entry point for a lot of people who missed it. So Ethereum is at support. Currently, it is at support. The RSI says it's going lower, but let's look at the volume. Big, our big volume is somewhere around here. So yeah, I don't know. Ethereum, we'll see. We'll see how it goes. We're headed into a huge catalyst, which is the ETF. Once they pass the Bitcoin ETF, you got the Ethereum ETF next. Oh, you said Mark Cuban working with Sergey? No way. That is huge news. Mark Cuban working with Sergey. Sergey Nazarov is the CEO of Chainlink. All right, is it the CEO? I don't know. I don't know. I don't know if you call it the CEO, but he's the lead developer for Chainlink. He's the talking piece for Chainlink Labs. And also another important thing, Chainlink actually started before Ethereum. It's actually older than Ethereum. It didn't start trading till 2019, but the actual use case to tokenize all real world assets and to create a verifiable web, that started in 2014. So that's what this is doing, is creating a web that can all be verified, right? So you don't have bots, everything gets verified. Real world assets, all world assets being tokenized. And I think the biggest use case here is this. CCIP is pretty much the TCP/IP of the internet, or of not just crypto, of all blockchain technology. So if the biggest banks, JP Morgan, Swift, Euroclear, ANZ Bank, BNY Mellon, all the biggest banks in the world are going to tokenize their assets on the blockchain, not on crypto blockchain, on their own public blockchain. Well, in order for that to actually work, they need a protocol that connects them all. This is Chainlink. Chainlink connects it. In order for them to use it, they need to pay gas fees or link token. So they're going to be paying link token, which generates a revenue. And if you have now Swift transacts about $2 quadrillion a year. DTC, $2 to $4 quadrillion a year. That's two banks. So we're talking quadrillions of dollars transacted, where CCIP is going to pick up a piece of that because it cost, you have to pay the fees to actually make the whole layer work. It was on Bloomberg's official Twitter. Wow, that's huge. I'm going to look at that up right now, Bloomberg. So if you pay those fees, I mean, we're talking huge revenue fees for Chainlink to connect the entire financial system. That's what it's doing. It's creating a verifiable web for the entire system. Also, AI is a big threat. We know AI is such a big threat. Well, the defense, I think, is a technology from Chainlink Labs, which is zero knowledge proofs. And basically, AI cannot create. So what it does is it forces AI, not forces AI, it forces identity metrics to be met in order for something to be true. So on the blockchain, you verify something is true. And if AI is creating some article or whatever, Chainlink will check it to see if it's verified automatically through a smart contract. And I mean, there's a lot of use cases. I don't want to go too dive into it, but let's see if Bloomberg actually had that. See if I can find it. Said Bloomberg. Which one? Bloomberg Business? Probably business, huh? Let's see. Bloomberg Business. Take a drink here. Okay, here it is. I found a small piece. I don't know if this is it. Mark Cuban, and Chainlink founder Sergey Nazarov are both investors and are on D Climate's advisory board, along with J. Peter Pham, the former U.S. special envoy to the Great Lakes region of Africa. Cuban is worth Okay, I don't know what that is. See if I could find something a little better. Oh, it was on Catfish's page? Okay. Okay. All right. Yeah, we were just on his page. This is one of the foremost experts for this guy's Twitter has probably one of the best insights to Chainlink. Oh, here it is. Bill. Okay, yeah. Look at that. Bloomberg billionaire Mark Cuban found and the founder of crypto company. Wait, what? Oh, and the founder of crypto. Okay, plan to pay for the preservation of a swath of Congolese forest and generate 1 billion in carbon credits. So they're going to tokenize. Okay, I see. They're going to work together to tokenize carbon credits. I don't know exactly how that works, but you're creating new asset classes basically. Your ability to create new asset classes, trade those asset classes, and you're creating new markets that never existed. That's what's happening here. So this is Bloomberg's official page. And this is the Euroclear securities depositories, main central securities. So this is a Euroclear group, which is they settle all the transaction security, all the security transactions in Europe. They're also using the interoperability of Chainlink to tokenize their assets and create new infrastructure. So it has the most use case out of any crypto. Plus, the whole crypto market uses Chainlink for price feeds and for oracles for their actual smart contracts to actually work. They need Chainlink. Carbon credits is what Australia's bank ANZ is doing with Chainlink. Okay. All right. Yeah, it gets very complicated. It gets very complicated. I don't know exactly how the it works, but you're creating new markets. I mean, there's a reason why it has so much demand. um all right, so yeah, we let's go ahead and wrap it up. And basically look, S&P profits margins are set to rise in 2024. Earnings estimates are up. Inflation was non-existent. Actually, let's look at the inflation report. We didn't even look at it. So core inflation month on month. Okay, it did pop up a little bit. And guess what? All of this inflation came from housing and used cars. Everything else is down. So it's just used cars and housing. Tom Lee talked about that. X used housing, or it was housing, shelter, X hotels. So that's where it's all coming from, two places. And that's just month on month. On a year over year basis, it's pretty much flat. So it does look like it's starting to base, but this is not a stock, right? This is not a stock. The reason why it didn't fall is simply because people spent a lot more in October and November, right? So December, I still think that December goes down to 3.9 simply because of oil prices and gasoline prices down. That reflects on this past month. But see November, December. So I think we go to 3.9 and then we really fall off a cliff in January, February. Well, no, that is going to be January. February, we really start to fall off in inflation. And so, yeah, you got 4%. Now that was core. Okay. Inflation rate month on month. I mean, we're at 0, we're at 0.1. It's done. It's pretty much done. And that's a month on month inflation, year over year headline. This is where I think people get excited. I think we had that little bump up, and I think we're going to 2.9 on the next reading. 2.9, either next reading or after that. But you can see it had a little bump and it's rolling over. Shouldn't bottom out here. And that's simply because consumers are going to stop spending, demand is falling, and that's it. Tomorrow we have PPI, and then we have the Fed meeting. So I'll probably tweet out about PPI, see how those numbers come in. We're expecting 0.1, 0.2 month on month. Core, I want to see core 2.2. Core is expected to come down. That'll be good. Producer prices, as long as producer prices come down, that automatically makes it cheaper for companies to run their business. And if it's cheaper, their profit margins are set to rise going forward. Still bullish. And then PPI year over year at 1%. Wow. And then you got the Feds talking it up, and everybody's going to be watching futures, not futures, but the FOMC projections. So yeah, that's what we got. The economy is growing, and I think this is I wrote this on this weekend. If you want to subscribe to the newsletter, link is in the bio. The new economy, productivity, expansion. So as I know everybody's like, oh, we're slowing down, everything's going to slow, but keep in mind that the forward-looking growth indicators are actually rising. They're actually rising or bottoming out. So forward-looking growth is set to rise. That's because productivity is picking up. more output per unit of labor, or one person is producing more than they did in the past. Okay. Yes, jobs are falling. That eases the labor market, but unemployment's not spiking. So people are still coming in, and the gig economy is going to hold up spending. The gig economy is where it's all at. This is where everything is happening underneath the hood. They're not in the numbers. US money growth year over year, global liquidity also picking up from the lows. Well, this is not global. This is US liquidity, US money growth. It's only going to go higher. It's only going to go higher because he's going to keep up the stimulus, and if anything happens, they're going to work together to send out stimulus checks. Now, it might not be direct stimulus checks. It could it could be. It just depends where the weakness is at. But they'll find a way. He's already signing another, student loan moratorium bill, and I just, it's kind of common sense here. His rating is down, and he needs to buy votes. He needs to buy votes. Earning estimates are up, Q's up, ISM cycle up. That's all I got for you guys. I appreciate you guys joining the live. Right now, if you are on TikTok, I am banned on TikTok for some reason. I don't know why. There's a bunch of people impersonating me, and they're probably trying to scam people. But I'll be live on YouTube until then. Tomorrow at right before the Fed, meeting. I'm not sure. We might do. We all know he's gonna pause. We all know the pause is here. So I'm either, and I guess you'll find out. I'll either run the meeting before the pause. We'll look at some technicals, go over some stuff, or I'll just go like 5 minutes before he starts speaking. Either way, I'm gonna do a live where he's speaking live, and I'll probably be sending through the chat like this, right? Be sending stuff through the chat to tell you, okay, this means this, or this means that, or this is what he's saying. Um, and we'll see what we're looking out for. So I'm going to be live on that. Other than that, thank you guys for joining. I appreciate you. Don't forget to like the video, subscribe. I would appreciate it. Got a newsletter down. The socials are at the bottom. You guys stay blessed. Get your workout. Stay positive. No, I'm just kidding. Work hard. Work hard. Remember, your efforts are what make you better. Okay, that's one thing. Your efforts make you better. So judge yourself on improvement, whatever it is, off your efforts, not the actual goal. Off your efforts. Give your best efforts. Eat clean, eat a good diet, stay healthy, go lift some weights. There's some new studies out there that show people should be actually intaking more protein, right? To grow muscle, or not to grow muscle, but for longevity. You should be eating more protein. Stay away from processed foods. Okay. Lift weights, get that blood flow throughout your full body so that you can live at the optimal level, so that you could be optimal. Other than that, all right, you guys stay blessed. I'll catch you next time. Thank you for